Good day traders and investors, welcome to our newest technical update in which we're going to discuss 3 high potential setups which can produce some profitable movements in the following week between the 22nd and the 26th of January 2024. Before we get started, I would like to remind you about our new TradingView community that we announced last week. We have been growing for the last couple of weeks and already we've published several extremely profitable trading setups. You can find the link towards our TradingView profile down in the description, together with links towards our Instagram and TikTok profiles. Additionally, we're posting a link towards our completely free Telegram channel in which we are also sharing high potential trading setups and important market information. Also, make sure that you subscribe to our YouTube channel so that you don't miss out whenever we're publishing our new updates. Now, without further ado, let's get started. For the first setup in this update, we're looking on a 4-hour chart for EURUSD. Here's what we got. The blue lines are indicating that for a while now the price has been moving in a general uptrend indicated from this bullish market structure. Recently, the price corrected to the downside where we're getting the formation of a double bottom. We're going to check that in a bit. Now, what matters is that on its descent over here, the price started forming the pattern on this 0.618 Fibonacci retracement level. Additionally, if we zoom out, you can notice that this is also aligning with a very strong horizontal support created from this period of volatility right over here. If we zoom in on the current situation, we can notice that the price started forming a potential perfect double bottom. It closed exactly around the neckline. For this pattern to provide an entry, what it needs to do is to close effectively above this neckline range over here. Some additional confluences to take in consideration. First, over here we have 3 exponential moving averages. The price already crossed above the 20 over here, and we can notice that right over here the 50 and the 200 have crossed just a bit above the neckline range. What this means is that as the price potentially goes up to break above this neckline, it can also effectively close above the 50 and the 200 exponential moving averages. If it closes above them, then this can be an extra confluence that the price can go higher up. Finally, we can add the relative strength index and the MACD indicator. Now on them we're going to notice a couple of things. First, the RSI over here has been producing a very obvious divergence. You can notice the red line over here in the price connecting the low points. It has been having a decline, while the equivalent low points in the RSI have been forming an incline. This gives us an RSI divergence. From the MACD perspective, we can notice that over here it produced a very obvious bullish cross. For this setup, we're looking on EURGBP 1-hour time frame. Now things here are relatively simple. If we zoom out, we can notice that over here all of those low points have created a very obvious strong support range. And if we zoom in on the current situation, we can notice that the price might be forming a potential inverse head and shoulders. The reason why we say that it's potential is because over here we are midway through this shoulder. Now for this pattern to be valid, we need the price to reverse to the upside in this region to go up and close effectively above this neckline range over here, the blue one. If however the price keeps on dropping lower and again it gets close to this support range, then this is going to invalidate the inverse head and shoulders. Now, aside of looking for the price to go up and close effectively above the neckline range, What is also important is to take in consideration the 20, 50 and 200 period exponential moving averages. Currently, the price is located below all of them. However, if the price starts reversing to the upside, very quickly it can cross above the 20 and the 50, and once it produces a potential effective close above the neckline, this can also allow it to close above the 200 period exponential moving average. If the price manages to close above all those three exponential moving averages while fulfilling this pattern, then this can give it extra certainty. For our final setup that we're going to discuss today, we're looking on a 1-hour chart for CHFJPY. Now, first of all, we can notice that the price has been forming a very obvious uptrend channel. Recently, it dropped down to the uptrend support line where it's been encountering some strong support, and over here we got an indication that the price can go up, but after that it dropped again. Now here we can notice that the price did cross below the general uptrend support, but over here on a couple of occasions it managed to go back above it. In the process, we can notice that over here the price started forming a very obvious double bottom chart pattern, which looks like this. Now, for this pattern to produce an effective entry, what we need is for the price to continue climbing up soon after the opening of the markets on Monday and to close effectively above this neckline right over here, which is located around 170.76. Some extra confluences to take in consideration. This range that you see going across the chart is actually a strong support range created from old high points in the price. Look, if we zoom back, you can notice this major high point over here and this one over here, which are creating this strong support range. Initially, it was acting as a resistance range. You can see that the price hit it here, couldn't sustain, dropped below it, then over here it broke above it, and since then it's been acting as a support. We can notice that the price dropped here a bit below it but jumped up, dropped here a bit below it but jumped even higher. The price tested it again over here and produced a strong increase, and right now we're looking at the latest situation. One more thing to have in mind are the exponential moving averages. So we can notice that over here the price has been bouncing from the 200 period exponential moving average. Now over here it bounced up from it again, over here again, here it got close to it and went up, over here same situation, close to it and went up. We can say that recently the price has been respecting the 200 period exponential moving average quite a lot. Now, if we zoom in closer, we can notice that over here the 20 and the 50 are getting very close to one another. If the price continues up to produce a bullish closure above the neckline of this double bottom, then it's also very likely for it to break above the 20 and the 50 exponential moving averages. This is going to provide additional confluence that the price can go up. And maybe one extra detail that we need to add over here is that if the price crosses above them, very soon the 20 and the 50 can cross below the price, providing a further bullish confirmation. Monitor for that as well. I hope that you've enjoyed our latest technical update on the markets, and I do hope that those 3 high potential trading setups help you in the following week. If you like this sort of information and content, then I'm reminding you that first you can subscribe to our YouTube channel to make sure that you are notified whenever we publish new updates. Additionally, you can find us on our TradingView profile where we constantly share new trading ideas. You can join our completely free Telegram channel. You can also find us on Instagram and TikTok. All of the links you're going to find down in the description. I want to wish you one very successful and pleasant week. I'll see you next time.